All right, all you devils, how we doing today? Here we are, the 5th of December, kind of middle of the day. All right, so, boy, great response, as I mentioned. Love to see all the interest in, well, you guys are all over the board on trads. We've got virtually everything in here. We got commodities, we got indexes, we got individual equities, lots of FX spreads. So I'm really encouraged to see that. Just, as I always encourage, or diversifying out across asset classes. It certainly has its advantages. Of course, everything that we teach is consistent. You apply it to any chart, anything that moves. So I'm glad to see that. So here, now this is, we've been through the euro many times, right? But this is, right, I'm on a 3-day out here, and this is particularly what's happening over here. Right, and we're going to get there in a second. All of that, just a great example of really why so many people struggle with FX to make money consistently, because they refuse to get out to the longer term, right? So you get caught in all the chop here, and it just seems like it's a fool's game. It's just there's no rhyme or reason to it. Now we'll get there in a second here. So I want to make the point here of the advantage of coming out to this longer term where you can see the wave count. Well, at least if you're applying Elliott here, you're going to get a much clearer sense of where you are in a count when you're out here, whether it's daily, 3-day, weekly. To get out of the noise, you got to get out here. Now, the problem with that is that this requires tremendous patience. I mean, look here on this 3-day. This is 8 years up, and we're still going down 8 years later. Now, how many traders, right, can sustain for that length of time? Not many, right? Pros can, right? Pros, right? We look here, right? From 38, had a little extra legs on it here, but so there's this 1, 2, 3, 4, right to the 38, just textbook. What is that? That's 14. That's a 3-year move. It's very, very. I understand, right? It's very hard to stay along with that. Just really requires a different mindset in terms of how you approach the markets. So with all of that said here, so from our what is this? Jesus, 01 low to our 08 high here, we can see the clear impulse. Now coming down, the assumption being I've got an impulsive up, and I'm in the process of correcting that, just with our Elliott hats on. So there's one thing I wanted to show you here, and we started on this the other day here. And I just wanted to finish that thought. I think I got distracted by the chart action. We talked about this, right? So here's we know this is the standard. Let's go back to, come here. Let's just get a measured move here. I've got other things on this. All right, so we know this is the foundational algo that moves the market. I'm on trading view. All right, so we get a swing, we come down, we get into our buy zone between the 50 and the 618, we come up, we get a target. All right, so this is, as I have said the other day, this is the DNA of the market right here, right? We can apply this countless ways. All right, now, I also want to remind you that God knows how many algorithms are in the market. I mean, I can't even put a guess to it, right? It's more than we can imagine. Don't know where they are, don't know how to track them. This is one that we can track, right? We see it, it's relentlessly persistent, right? It's in every market, every asset class, every time frame, period, right? You must accept that. Now, we can look for other tells, right, that would appear to be tied to an algorithm, right? So this is one that we certainly in the shorter term stuff that we do in the day trading room, we're looking for this. So here's the other that I would propose to you, right, with enough study. I think you might find that we also have another algorithm here. So here's the idea here. So we get a swing. So it's an internal to an external, right? So it's just an alternate price projection. So you have this inflection point in the market. So as we're coming up here, we recognize that there's an algo target here, and this very well can be a place where profit is taking, right? Whatever algorithm bought it here is going to start to take profit here. But we often see cases where we go second target, third target, right? So if it's going to turn into an impulsive structure, if we're going to get a 1, 2, 3, or even an ABC, where we'd be anticipating a move more in the 100 to 1272. That would be your prime zone for a C. Now, if we're looking at a third wave, now we're talking about targets up here at 1618. But here's the key piece right here. Right? It's this spot right here where we get some tell as to how strong the move is. Are we corrective, or are we more likely to go into something more impulsive? And that's what happens here when we come up to the 23.6. If we fail here, right? So oftentimes you'll see this. You'll see a little reaction there as the algorithm starts to take profit, but then there'll be another kick. Now that could be tied to a lower degree, a little algo pull that's there. So it might be something in here that you had a little swing here. So it could be, I'd have to change colors, but it would be something along these lines that can kick that up. It's just happening on a smaller degree. But this little move here, if we see something like this, where you come up here and then we fail again, and then we start to head down, that is a significant tell. Well, oh shit, I'm trying to do it this way. That thing is sticky to your mouse, right? If we come down like that, if we don't push up here and get towards the 100, that's very often a tell that you're looking for a reaction the other direction that could be substantial. So let's take that concept here. We're looking for the 23.6 here, and if we don't go through it, if we don't make the 100, you can expect a trend reversal. Right now, as to whether it's a major trend reversal, well, not so fast. But in terms of this swing here, let's do it this way. I think this thing works. Okay, this piece of it right here, right? If we don't make the 100, you can expect some sort of a reaction come down here. Now, this is another one that you'll often see because I talk about this often. If we do something like that, we now want to change this. Let's see, how can I do this? All right, so let's try again. All right, so let me draw this in here. So if we come here, as we're coming down here, we want to be, there's always the possibility here that you're going to come down here and hit that 50. Here, let me take that off. So this one, I can do it right. So here, this is the one I want. We got to come up to this target. So the alternating pivots is something that we do see often. So you got to be careful for this, right? You got to be looking at that A, B, C. If it comes down here, we get into the buy zone. Often there's a response there. Right, so I'm look over here. You can see where I'm headed. All right, so let me just walk you through that and put it in context. I think it'll start to make a little more sense to you. All right, that was my little attempt to try to do it just with stick figures. Okay, so here we get a clear impulse here. Now, when this is going up and comes down, of course, you have no idea what's coming here. You don't know this, right? So we come up here, we come right to the 50, A, B, C. How would you know that that's not 1, 2? How would you know that that's not 1, 2, and we're going 3? Well, of course you wouldn't. Excuse me, you'd have no way of knowing that. Looks like it. Oh, 1, 2. Oh, maybe. All right, well, so let's just go dig in there. So there's a couple of things to note here. So one, right off the bat, you can see we've got this A, B, C pattern, right? All right, so now let's measure it. So, well, let's do it this way. So first thing that happens here, we go swing low, swing high. Come here. Swing high to swing low. We break the golden zone. So note here, we come ripping back up into it, come down, it fails. Now we go back and we get through. Right. So the sell side algo here is blown out. Right. So here you can see they defended here, can't get to target back. Now it's kicked out. So now we've lost the sell side algo here that would have been pushing from this golden zone, trying to get to this target down here. All right, but let's measure that. See, do we make the 100? All right, so here's the first swing. Here's the APP right here. All right, so we do not make the 100. So we've had a blowout. We know that the golden zone here didn't make target. We had a blowout here, and we failed to make the 100. So what happens next? After failing to make that 100, we get this rip right here. Now, we can look within that as well. So let's go swing high, swing low. Fails to make the 100. What happens? All right, so then in failing to make that 100, we head down again. Now, right here, I mean, you've got, I mean, we're right here on a 3-day, so you can project this. We could break into that as well, but I kind of wanted to stay here on the bigger swings. Otherwise, we'll be here for 2 hours trying to do every one of these swings, particularly in the euro. So we get another set of swings here. So look, this is a higher high than this high, so we can measure yet again. So we swing here to this high, to this low, to this APP. Fails to make the 100 yet again. So what do we get? We get a counter trend. Right? And again, I'm not saying that we're off to the moon here. That's not my point. It's that it's the failure on these internal swings. When we're not making the 100, that's a tell that you're likely to get a counter trend the other way. And we can do the exact same thing internally here. Now, I know it's getting a little trickier to see it in here. So we come this way. Right? Fails to make the 100 yet again. What do? We roll over. All right, I think, so particularly, this is, well, you see this in every market, but this is very pervasive in FX. So now I've got another set of swings here. So again, I can go from here to here to here to here. Now we measure that. So from this swing here, high, right? Now look, right? We make the 100. Well, if we hit the 100 here to the tick in the golden zone, we get a tiny little reaction here. So you might have been thinking, oh, maybe I've got something there, but then quickly, right, it breaks the 65 and down we go. The implication here is that upon making and getting to and through the 100, it's a confirmation of trend. So it's more probable that even if we do get a little reaction here, the trend is likely to continue. So you can look at it a couple of different ways. So what we actually get here, and this is somewhat unique to the euro for reasons that I can't tell you why, but for whatever reasons, the euro is very responsive to the 1272 and the 786. Right, so those are pivots to look for, particularly in the euro, and we'll show you a couple of examples. Not that there's not an algo tied here to the golden zone, but if you break it, particularly on the shorter term stuff, it's very, very common for it to go to the 786 and see a reversal, and same thing at the 1272. Just if you trade the euro a lot, you'll find that to be the case. But we have a larger one here. We can do this. We can do this on a larger degree here. So we could do this one to this one, right? So looking at that, now we could take into account this one from this one, right? Here's the 100 down here. So yet again, it's making the 100 here. So you're not, while you did get a reaction here, you're getting a retracement here. Look what we do on the retracement, right to the golden zone. So here, I know this is getting a little crowded in there. So let me just draw that up. Okay, so we see the breakdown here. So with this break, now we're sitting in the golden zone, but we've already had the break. So the dominant algo we've lost from this pivot high to pivot low. Right? That guy's lost. And when we get down into it more, we'll look at some of the issues that creates for us. But I want you to see this. So as we come back here from this pivot, I'm going to use the absolute low. Right? We come right up to the 6-1. It looks like we're just a hair shy. I get right on that. See, we just a couple. So it's likely just a front run on the 618 on the golden zone here. Could be we had some of the structure was coming into play here, right? So we had these prior lows. Yeah, we got through here. That very well could be kind of dragging that across all of this area here with some prior support, right? It's not to the tick, but we're in that zone. So we come up, we tag the golden zone, and now we head back down. All right, so I've got a couple of things here that I can work with here. I'm going to take this off just to clear it up a little bit. So I certainly have the potential here for another series like this, right? We could do another 100, but I've got a straight algo play here. So we know. We don't have to wonder what's happened here, right? We know an algorithm has sold there, and we'll stay short till we get there. But I can also do the same thing here. So I can come here, I go swing low to this pivot. Now here's my 100. So if I were to come down here and start to get a reaction coming out of here, right, something along these lines, and I start to move, well, now I know I've got a strong contender here, assuming the count supports it, for a pivot because we don't make the 100 of the last dominant series of swings. Right, so this one makes it, this one makes it. Now, if this one doesn't make that 100, I've got a contender here for a trend change. Right, now, so let's put this fully in context. So coming from here, we've already broken the 65 on this side. So the implication is more down. We lost the buy side from this pivot, and yet this 100 is still in play, and that golden zone still has a target down here. So what else would be here? Well, of course, we'd have a golden corner pocket, right? So we put this all together. Now we get that. So are we getting it here? Doesn't look like it, right? We're already past it. So if we're going to get, if it's going to go that low, we'd be looking well past this. If this is going to be the 3 pivots the market's using, if we're going to keep going down lower here, well, nothing says we have to get the median line, but if we were going to hit it, that's about where it hits, right? Which would be second target, which would be, guess what that is? We're pretty damn close to the 1272. Right? Should we come down that far? Right here, we hit it right about there. What else is there? Right, this channel that's kind of framing the market here. I'm just using these dominant pivots. Now remember, I'm way out here on the 3-day. So as you're looking at it here, excuse me, I mean, it's hard to sell that, because you look at it and you go, well, shit, man, that's been going down since February of 18. Right? I mean, this is it looks small to your eye, right? That's the thing about this longer term. It looks like, well, actually, I hadn't moved that much. Yeah, that's one. It's taken a lot of time. So, but I just wanted you to get some clarity on this. That 100 APP is high probability there are algorithms tied to that. So it's something to look for as a potential tell. If you're not making the 100, you can anticipate some sort of a reaction, and that reaction can turn into something significant. So off of this pivot here, it does appear. Now we're gonna get, I know it's almost impossible to see. I know we're gonna get there in a sec. Here, let me get all of this off. Okay, so from this pivot here, we do get an impulse. So per the Elliott count, if this is an impulsive up and we're in the process of correcting, well, given all the big swings we've got here, well, I got to go ABC into a W, ABC to an X, A, B, golden zone. Now here, at this point here, I'm just hitting the 618 of it. So if the ABC here, are we done? Well, I got a contender here. I could be done. Could be the Y is in here, and this is 1 with a deep 2, and I will get into that count in just a sec. But the contender is that we would have an X and an ABC would be going in as well. And is this the X? Well, there's an impulse here, so it doesn't look like that would play with the Elliott count as it's currently labeled. So if this were going to go down, we might be expecting a B. Perhaps we get a flat before we come down here for a potential C. So pardon me, an A would be an A, B, C. Something like that. So we could have Y. So I'd have to use the other one. So we could certainly have potentially A, B, or pardon me, W, X, Y, X, Z. If this is going to go A, B, C. Well, what would be a good tell for us as to whether or not we're going to get there? A, B, right? Do we make the 100? Well, if we start coming back here, that X is going to be in relation, so let's put it up here. This X is going to be in relation to the length of this ABC. So I'm going to pull it from here. So I'm going to go from this pivot to this pivot. Look what we get. I promise you guys that's not coincidental. Okay, so if, now heavy emphasis on if. I don't know that that's the pivot low here. I have a contender for it here. I actually don't think we're done here, because the count here, well, one, the count, I know you can't see it. The count here is so squirrely that I don't have a high degree of confidence as to where we are in that count. But what I can see is that I know I've broken the buy side algo here from this pivot. So path of least resistance is down. So now of course there's always the possibility here that we're just going to start to come back up. So we've got a swing. We're going to come back up, hit a 50 or a golden zone, then start down again. But if we look at the count, this is unlikely to be the X. One, we'd prefer the X to go to the 618, even though we're hitting the 50 to the tick, right? So we're kind of combining a couple of things here. So remember the idea that the alternating pivot, so we get that ABC comes back to the 50, pay attention, that's got a target down here. Right, so these things are always working in combination as the market moves. There's one algorithm picking it up here, another one picking it up here. We're just trying to figure out where can we get the slightest advantage or edge on probabilities. That's all we get. If you can find a slight edge, that's it. That's all you're ever going to get. So quit looking for more than that. Do I have a slight edge? Well, maybe something like this. We're not making the 100. Is that giving you a slight edge? Something like this, if we went here into this and we went up to golden zone, wouldn't that just be textbook? You'd be in the golden zone but not making the 100. Right now, we don't know that we have the pivot here, but I kind of wanted to put that all in the context of something like this where we have these giant swings. Right? This is very typical with FX, right? It's swing, correct it, swing, correct it, swing, correct it. It's what's less typical, right? Most of the time, it's that kind of chop. To get a sustained trend like this, an 8-year move like that, well, one, very hard to see unless you pull way back out here. But to get that kind of sustained trend, it's less typical than this chop, down, up. Now, these are monster swings. Just looking here from the A to the B. That's July of 2012 until March of 2014. Right? I mean, again, to your eye, it looks like, oh, it's just a little ABC in there. That took almost 2 years. Right? You got to get out to this distance here. All right, so enough of that. Let me go down. Let's try the 8-hour here, see how that looks. Now, all right, here, I'm going to have to clear some of this stuff out of here so we can see it. Okay, bear with me just a sec here. Let's get all of this out of here. All of this. Get this out of here. Okay, let's come down and focus in on this count coming down. Now, so the first thing we got to look at is, well, what do we do with this? All right? Because wouldn't it be convenient if that were corrective, right? That would be a nice X force, even though it makes the 50, but you can't. It's a clear impulse, right? In the same way that big, well, shit. In the same way that the big one here, that's a clear impulse, right? We can't just go, oh, that's inconvenient to my count. I would much prefer that to be corrective so I can get my X there and go ABC. Well, sorry about it. Okay, so where was I? Let's go back to that 8-hour. Now here, looking at this, I've got an impulse here, so I'm more inclined to put. Well, I don't want to put the X here yet because it's an impulse, right? So could you force fit it? Boy, that's an ugly force fit. So I'm much more inclined to do this, right? So looks like that's an A. Now, is this a B? Question mark. Let's take that up a degree. Is this a B? Well, we can't just ignore impulses because they're inconvenient to our count. Well, 1, 2, 3, looks like triangle, 4 down for the 5. There's an impulse. I know the 5 is a little shaky. There's not great subdivision there, but 1, 2, 3, 4, 5. Now, great, I'm way out here on an 8-hour. It's there. A, B, C for the B. Now, it would be shallow, of course, for a B. Well, we wouldn't be anticipating it there. Excuse me, but the fact that we only make the 38, it's not like we don't see it. It's just lower percentage of the time that we are that shallow on a B. So coming off of that, if this is our A, because we're trying to play, we're looking for a B wave here. If this is the A and that's the B, that's all I'm going to get for my B. Well, I'm trying to finish with a C down here. Well, this is a little tricky because your eye wants to do this. Oh, what's the problem? 1, 2, 3, 4, 5. Oh, we're good to go, right? So some sort of a diagonal, we finish. Well, it doesn't work. Because if we measure length of the 1 projected from the 2, note, we don't make the 100. Right? So we get this little counter reaction after not making the 100. So we know that we can't put the 3 here. All right, so then possibly you could if this were shorter, but then you measure again. So you take the length of the 3 projected from, well, if this were going to be an impulse. If you were thinking 1, 2, 3, 4, well, no, right? 5, here's 100. So from this swing, we do make the 100. So, but in the context of what swing is longer, this is longer than this is longer than this, so third would be your shortest. So this can't be the third. So you'd have to go 1, 2, A, B, C, and we're looking now, we have to have the overlap, because if this is going to finish as an impulse, if we're going to go 1, 2, 3 via an A, B, C, well, we got to now have the overlap of the 1 for this to hold as an impulse. So let's get this off of here. So is that reasonable? Well, A, B, C into the third, so sorry, excuse me, we can do this way. length of the 1 projected from the 2. Well, now my third is longer than my first, and I've got an ABC, and I make the 100. So I've got a contender here for a 3. Okay, well, is this the 4? Doesn't look like it. Well, first, in the context of an impulse, can't be the 4 because we don't overlap the 1. Or pardon me, in the context of a diagonal. I can't have it because I don't overlap the 1. So this cannot be the 4. So what does that leave for us? Well, reasonable chance that's an A, that's a B, and we're going up for the C. Now let's try and combine this here. So we know we've got a contender here for the third. All right, so let's dig in down here on this. All right, let's go to a 4 hour. That ought to do it. Okay, so double top. Very common, right? Double tops, right? It's my nemesis. I get burned by these all the time, right? So I'm very mindful of looking for them. So I'm probably dig some sort of an impulse out of here. Maybe. Looks like that could be a truncation in the 5 coming down here. But what am I really looking at here? Well, first question, why do we stop there? Why don't we just keep going? Right? Do I even need to draw it up? Oh, right on it. There we go. Oh, we get a hair through it. Right on it. Yep, we did get it. Just so you've got, if you see that there, just a whisper gets through it. So that would imply, right? So look what's happening here. And so we've got, let's check both sides. If I use this one here. So now this is something that you will see. Get right on that. Okay. So we're getting a very slight break here and a very slight break here. I mean, these are really tiny little breaks, right? And it's often, I can't even draw them, right? It's so small. When you see that little break on one side, you'll often see the exact same thing on the other side. Very, very common to see that here. Now, so who actually has the advantage? Hard to make that call. Right, so you're getting a little break here, a little break here. So in the broader context, you'd have to say, well, okay, we're just stuck between two golden zones. All right, let's get them all in here. So where's your what do we got? Who's going to win here? Right, keep in mind. Well, you got a couple here. So you've got this one here. That's a break, so you got to go back to this one. All right, but I think this one was also good here. We already hit that target. Okay, so we're kind of in between here. So I've got a swing, I've got a high. I'm in between the 50 and the 618. I come down here, I run into this golden zone. So I have a contender here for a 1-2 or an AB? Right? How do you know? B, C. Well, if it's going to stay with the context of the count as we have it currently labeled, if that's the 3, we're looking for the ABC here, right? That's what we need to see to get more confirmation in this count, which would set up the potential to come down here and finish the 5, right? The 5 of the C of the B. All right, let's try and put that together. So let me clear this up a little bit. Let's take you off right here. Okay, so what do we have here? We've got a solid contender, even though we've got the very slight break for golden corner. Now, so we take off from here and boom, right? We run right into this algo. Right now, it's had a little break. So the tell would be, even though we've had this little break and we had a very tiny little break here, it would be the expectation that we're going to go up here and get this. Right? If that's going to be realized, well, that would do a couple of things for us. One, we'd be breaking that. Get it over here. That wave 1. I got to get it right on there. All right, we got to get to that wave 1 pivot. All right, so if we get to this line, and so if we can get remember it's 80%. If we can get to that here and realize the C, we'd be putting in a perfect 4. Right? So now we look at that 4 relative to the 2. Here's the 2, down to the 3. So we'd be in between. So nothing says we have to stop here, but if we hit that, you would have done just enough to qualify here. We know in a diagonal, there's 2 things to look for. There's, assuming it's a diagonal, well, we're certainly going to we're going to check the 2 looking for the 50, but I would also go back to check the top from the top, just to see. Right, so in a diagonal, very common to see a reaction at the 50 from the length of the start of the 1 through the pivot of the 3. Now, assuming this holds as our 3, and we're not just going to, this isn't going to just turn around and go down. If we're going to go up and get that target and complete the idea that we've got the 4 going in as we overlap the 1, then that's potentially now just setting up for the move down here to get the 5 of the C of the B. So is there a trade? Well, I would not be, well, okay, look at this. Right, do you want to buy into that structure, right into that golden zone? I don't. Right, that's like the one place I would not even consider buying. Why? Because I've tried it way too many times. Right, there has to be something driving the market, because without a news or something that's pushing it, or a report or something that the market can latch onto, this is just algo ping pong, right? It's just boom, 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 618, 618, 618, 618, 50. They're bouncing back and forth. Look at this coming down, right? What subdivision are you putting on that? Right? What's that? Good luck, right? I mean, could you put something on it? Yeah, probably. But really, is that the kind of count that you want to see for a 3, 4, 5? That's what we're looking for. Is that what we have here? No, right? This is very typical, and this is sort of back where I started. This is why people just get eaten alive in FX. Right? They're down trying to trade the short term, the 30-minute, the hourly, and it's just up, down, up, down. There's no rhyme or reason to it. Every move, look here, so it's down and then retraces beyond that pivot. So, I mean, what you can do is come in here and do these same kind of things, looking for these tells. And this is a good exercise to go through. So note, here's the 100 to the tick. Reaction comes back. Now it gets through. So that would imply to you that the trend should continue because we made the 100. So you could do the same, damn near the same thing. So you could just look at this one and say, do I have it? Right, from here to, well, let's bring it over. Right. Here, I don't make the 100. Reaction, come back down, and now I get the 100. Trend continues. Right. The implication is if I make the 100, it's more probable that this trend continues. So if I look right here, likely you just had another trade right here. So it's not, these are kind of, we're getting a lot of reaction between the 50 and the 618. So do you see, I know this gets really crowded here, but do you see that there's the target? So because it makes the 100, even though we get the reaction, it's a perfect setup for the sell, which gets you right to the target. Reaction. Now, are we going second target? Well, we shall see. Now, here we get this reaction. Okay, so we got to get up to the 100, right? That's what we were just putting together. If this goes up and we get into that zone, we hit that target, we'd be hitting this. Well, let's get this off of here. If we get that 100, right, there's the 100. We want to see it fail. We want it to get just far enough to get overlap that 1, hit that algo target, hit the median line, not make the 100 because that's the sign of weakness. Do you follow me there? I don't want this going up to the 100. I want this to pivot at the algo target and the median line. And I can kind of look across and go, okay, I can see prior support. You know, it's very choppy here. I've got a big node here, so I've got this little stand out here, bring this across, right? We can kind of see that. So we know there's going to be volume here, and larger players could bury their size here. They could bury it even better up here. So nothing says that we must turn there, but that's what we're looking for. So that's the trade that is setting up here. We need this to get up just far enough beyond this 1, and then, so I'm out here on a 4-hour. You got to wait for the little reaction, and you take the first little retrace because what you're looking for is this to finish it. So the setup, all right, so we can do a couple of things here. So clearly the trend is down. It's just a relentless series of lower lows and lower highs, right? One right after the next. So this would be potentially, right? So this would be of note. We'd have, in this case, we'd have a higher high. Right, so we need that, well, just like we did here, right, for the correction. We need that to complete, but we're looking for the final push down using all of those little pieces that I just kind of walked you through. Shit, this went long. I didn't see we were at 34 minutes already. Okay, right, so we should probably wrap there, but I thought there was some good meat here. So this would be the real tell. So if it's me, I'll put an alert, I'll put an alarm right there. right on the 100 because I want to know if we get to the 100. I don't have to watch it. I just want to see. Well, I'd also be putting an alert on the median line and the first algo target in case I wasn't watching this trade. But that's the tell that we're looking for. Now, do I get a reaction there? And then, of course, the first thing that has to happen is we got to break the upsloping parallel to the median line. We got to break that. So ideally, you'd break it, test, and then you're coming down like that. So this could take a month to get there. I'm on a 4 hour, maybe not that long, but we certainly take some time to get there. Oh, let's see, look at this one. Yeah, it's not quite as long. So this is the 19th. So here's the actual low. May 22nd to June 25th. It's a month right there. So for this to take a month, that wouldn't be surprising. So from this low here, so what's our low here? September, the 30th of September to catch this on mid-December. A little over a month would be just about right. It's slightly bigger, right? It's a little bit more like that one. So if we're going to come up and do that, then that is sell all day long. And you can put your stop just on the other side of the 100. You see that, right? Because if it makes the 100, now the probability, we'd have the potential that something else is going on. And from this golden zone here, we're going to go up and we'd get the 1618. Well, look where the 1618 is, right at the prior golden zone. Right? This stuff just, they collide into each other all over the place. So you're looking at that going, oh, if it breaks, it looks like it's going here. So then maybe, right? Maybe this is done here and I got to go 1, 2, 3, 4, 5 because it's no way to know until you find out. Do we go 3, 4, 5? Well, then something else is happening. Well, now likely the pivot is in here, and now I'm off to the races here. I got an impulse, but I won't know. The first tell as to whether I'm going to get that is, do we make the 100? All right, I didn't mean this to go that long. All right, okay. Hopefully, some things to work with there, and some things just I would encourage you to consistently go through, particularly when you're out here on these longer terms, 4 hours and above in FX. Look for that 100. Right, look for that as a tell as to whether or not we're going to continue. Okay, guys, I'll wrap it there. Back with you. We're going to do one more today. Okay.